The commission that you earn as a loan broker on any one particular deal or loan opportunity is going to be impacted by many different factors. At the top level, it could range from 1% up to 25% of the total financed amount. What are those factors? Well, one is, and perhaps the largest, what type of financing you are offering in that scenario. So if you look at a commercial real estate loan that's going to be a mortgage or permanent or term financing, that would often be in the 1%, 1 point, or 2 or maybe 3 point range. Right? If it's a hard money or a bridge loan, that's going to step it up, maybe 2% to 4%, something along those lines. Then if you look at equipment, that could be 1% to 4%, depending on the nature of the equipment, the size of the deal, the type of industry, all those sorts of different factors. And then you're also going to be looking at SBA loans. Now, that's the one space where there's actual regulation. That's pretty much the only space where there is a hard limitation on what you can charge as far as commission. That's going to be in the 1% to 4% space, but typically you're going to be looking at a 1 to 2 point area, 1 to 2% of the loan total amount as your commission for an average SBA deal. You are then looking at business loans that are just general working capital. That could be a term business loan. It could be a line of credit. It could be a whole variety of different types of short-term financing. And those are going to, again, range maybe 1% to 5%, something in that range. You also have some unique ones. So merchant cash advances pay a very, very high interest rate. And we also have lenders that are not as expensive as MCAs, and we think of as MCA, merchant cash advance adjacent, better terms, but still pretty darn tootin' expensive. And they can pay up to 25%, 30, 35% interest or commission. The challenge is that the interest rates are so high for them that we really treat those in our philosophy as a loan of last resort. We have the lenders in our network, but our philosophy is that you are always going to grow fastest if you are going ahead and serving your clients as well as you can by keeping their cost of capital as low as possible, because that is what creates return business. It's what creates repeat clients. It's what creates referral after referral after referral. And that over time has a much bigger impact on your bottom line, on your profitability over the years than any one particular loan opportunity where you charge a higher commission rate. So we do have those lenders that have very, very high commissions, but we try to steer away from them whenever possible to best serve clients. Now, all of those numbers that I gave would be more the client facing, the discussion that you're having with the client about the commission you'll charge them for your services if you are successful and get them the perfect financing and they decide it is great for their business and they move ahead. Now, with that, you also have a range because it's based on that particular client, how much work it's going to be for you to get them financed, what you feel is a fair amount, and how great you are in the negotiation process. And we also include in our programs trainings and practice sessions on negotiating to really make sure that you are getting a win-win and you're getting paid very well throughout the process on working each and every loan opportunity. But those are all client side commissions. You also have lender commissions. So you might charge a particular client 1 point for or 1% for a particular loan. And then that lender may, let's say it's an equipment loan, and then that lender might also pay you another point or 2 points on the back end as part of the yield spread on that loan. So you might only charge that client 1%, but you actually earn 3% of the total amount financed when all is said and done across all different types of commission for that one particular loan. So that's why you see such a gamut, even within each product category, based on the details of that client, your negotiation skills, whether you are receiving multiple commissions along the way, and all of those different factors. But Those give you some very good starting points for wrapping your head around common commission rates in our industry. And our philosophy is always that you want to serve clients well. And that means charging at or just under what standard industry fees are. And all of those numbers that I gave you align perfectly with that, even though you could charge much higher numbers, because ultimately the commission is whatever you set it to be with your clients.